Hey, it's Clay Trader, and this will be a video chart on ticker symbol AGRX. We will take a look at the 15-minute time frame. Real quick, what do I mean by 15-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 15 minutes. So while this here may look like a couple weeks worth of time, it's actually just today's price action broken down into 15-minute time slices. I like to this time frame. I think does a good job of telling the quote-unquote story of the price. And in this situation makes mapping out a very logical question quite straightforward. And the question revolves around the fact that today there is a very nice bounce from the gap down and then as low as it got right there from where it ultimately closed right here. There's no doubt about it. This was a very solid bounce. Nobody's going to argue against that. However, that does bring up the very logical question, is this a real bounce? Does this bounce have any sort of genuine power behind it? Or is it just some sort of knee-jerk reaction, or a dead cat bounce? I have no idea, but like I said, by using charts, we can make answering that question very straightforward. And in my mind, it revolves around a single level. And that's why I love charts, makes things very straightforward. But that level that I would use is right here at $2.20. Why is $2.20 so important? Well, hopefully we can all agree on the logic that price movements with true power, with genuine strength, bounces that are actually bounces, well, the price is going to make progress forward. The price is not going to go back to where it was. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price movement is truly strong, it's not going to go back to where it was. So with that in mind, think about $2.20, that green line. Any sort of closes below it, or worse yet, if the price separates to the downside, what is that doing to the price? That's putting the price right back inside of this range where it already was, back in this portion of the day. Again, going back, not a sign of true strength. Whereas let's say the price pulls back here a little bit, bounces around, and then heads back up. What would you have in this situation? Well, you'd have a set of lows right here. You'd have this set of lows down here. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upward direction. And that's what truly strong moves do, right? That's what a genuine bounce is going to do. It's going to keep on progressing in the upwards direction. And I'm just defining progress as staying up above $2.20. What about areas of resistance? If the price is going to keep on fighting in the upwards direction, not only is it obviously going to have to, build higher bases, but, break to some new, highs. So where are some of these resistance points? Just going to talk about one for the time being, just because, yes, you want to break through levels of resistance, but top priority at this point is just putting in some higher bases and building higher lows. So key level of resistance at this point, $2.85. And of course, keep an eye on that purple line there, which is the 50-period simple moving average. But again, at least in my opinion, top priority is not breaking levels of resistance. Top priority is now working on building higher lows as time unfolds. So we'll see what happens with it the remainder of the week. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point. And like I say, it is free. Thanks for watching. Have a good one.